Thank you, Blake. Normally, I just go to the screen and it starts. Okay, TGIF, everyone. Hope everyone had a good week. So I'm going to make it a special Friday. It's free Friday. That means anyone who signs up for a trial just for today, it's going to be free. Just give me your address and I'll mail you $1. Free Friday. Free Friday. Go ahead, click it, sign up. I'm going to invest $1 in you so you find the right place to hang out, take advantage of these markets going into what's going to be a pretty wild fall with the midterms and all the geo stuff happening. So I want you to be with the best team on the net. So I'm going to plant some good seeds and postage, yeah. I'm not going to wire it because it would cost $20 to get you $1 back. Oh yeah, and Ziggy, when he would mail me, he mailed me something once, and it came to me postage due. I've never had to pay the mailman, so Ziggy and I still joke about that. All right, so we're getting a little risk off here. You know, I agree. It looks like, you know, unless this is a right shoulder in the S&Ps, which, you know, could be. Here's one, left, head, right, but it also could put in a 3. But I want to ask you guys something. Here's how the NASDAQ closed yesterday, right here. Basically unchanged, flat. When's the last time you saw the NASDAQ flat and the Dow up 350 and the S&P is up 20? So to me, that's a market message that perhaps this correction, I know a lot of people are looking at this uptrend line in NASDAQ. I think it's going to be broken, this uptrend. So I'm not sure if they're going to try and hold it together into next week. You know, perhaps a catalyst will be that everyone's breathing a sigh of relief because the dollar's come off a little bit. But when I look at the dollar on, say, the 4-hour, we only had one divergence here. So it is possible that we get one more shot down, one more shot up in the dollar, one more shot down in euro for a 1, 2, 3. But you know, you're certainly starting to get the look of what Blake was showing yesterday of a nice little mini head and shoulders formation setting up right here. I guess, I don't know what this spike was last night, but we start getting through the 114.20 level. You should have 1540 coming. That would be the measured move of it. But you could also have just one more shot down as well, because, you know, I know Greg had a lower target. I've seen some targets down around 11. Hendrick had a target at 1180 or something, and that would equate to about 97, 50, 80. So guys, I want to tell you, I'm going to be off for a few weeks. So, you know, I know how you guys worry about the whole team. It's just, okay, go ahead, Joe. It's justification. The guys are being gracious enough to let me take a few weeks off so that I'm in fighting shape for the fall. So, you know, don't worry. Okay, I know how you guys, oh, where's Steve? Where's Stelia? Where's Blake? Okay, I'm just taking a little R&R. Okay.
Well deserved, by the way.
Oh, thanks, Blake. Very generous. You know, it's the first time I've been able to do this in a while. So thank you very much. I'll be at the beach. I'm not real big on selfies, though. So, you know, hey, you know what selfies are kind of like to me? Tell me if you think this. Whoever sends a selfie, and I understand, you know, I'm from a different generation. Everyone knows how old I am, Blake. But selfies to me kind of say, hey, look at me, look at where I'm at, and look at what I'm doing and you're not.
Yeah, that pretty much sums it up. I mean, it does.
Isn't that what it is?
Yeah.
So, you know, I know, you know, when I was younger and we would take, you know, you'd want to remember your vacations, but you know, it wasn't digital. And, you know, someone would have to come over for you to brag, but now you could,
right.
now you instantaneous bragging. And, oh, one other thing, and, you know, I'm not beyond it. So, you know, I used to live in Phoenix like you before I moved to San Diego, and I landed this place right on the beach. Okay, so the beach was in Leucadia. I was there for 7 years. The backyard was the ocean. There were steps. I was on a bluff in Leucadia, and there were stairs down to the beach.
Great.
So I'd call my friends in Arizona in the middle of the summer, say, "Hey, how you doing?" And then I would just hold the phone up towards the ocean.
Yeah, and they're like, "I hate you."
Yeah, you hear that, guys? Anyway, thank you for letting me have some time to, you know, sleep in and just let go for a little while. I'll probably go crazy, you know. I don't know if I know how to relax, but I'm going to give it a good try.
Oh,
so
well deserved.
Thanks again, buddy.
By the way, the dollar yen is breaking down, and stocks are breaking down in the lows right now. So
good.
just FYI, yeah.
Yeah, that's
all right. Little bit of selling going on right at the moment.
Well, I mean, let me ask you the question. When's the last time you saw NASDAQ on change with the Dow up 400?
You know, that's the market leadership is the, you know, is equity, is the NASDAQ. And so it's really, you know, probably a little jarring to see that. You know, I think that the market is toppy, but I don't know if we're necessarily, I mean, this is probably, realistically, you probably want to be buying down here, you know, in the slow summer session. But I mean,
under 2,800, look out. That's all I could say, you know, in the S&P.
Yeah, and we
you know, maybe some people were buying the Dow because they're kind of like a flight to quality in the stock market. You know, they're the bluest of blue. If they're not, they get replaced. And they're also multinationals, so the dollar came off, and the Dow's been underperforming for so long that people just made a shift into, and maybe it was defensive, that 400-point up day in the Dow.
Yeah, I mean, yeah, I'm sure there was some components there that were rallying, but you know, the problem with the market, in my opinion, is that you have so many of the NASDAQ stocks that are leading, you know, that they're the leadership and big components of the entire S&P too. So, you know, you get the NASDAQ. Yeah, you get the NASDAQ 100 rolling over, and it could really, you know, drag down the rest of the indices at some point.
Yeah. I mean, it's a different picture. Look at the NASDAQ compared to the S&P.
Yeah.
Compared to, oh, that's a Dow compared to the S&P.
Turkish court rejects U.S. pastor Andrew Brunson appeal for release.
Oh, that's it.
Yep. Yeah, that pushed the U.S. dollar Turkish lira higher.
You know what?
Actually.
Put those two guys in a boxing ring and just get it over with. I think that'd be the best way to settle it. You know, in ancient days, sometimes the kings or their top warriors would just battle each other so that thousands didn't have to suffer. You know, so I'm up, I'm upward Donald, and I don't know Erdogan's first name, but you know, duke it out, guys. Just duke it out already. You know, what do you think, Stel? Would you go see? It probably doesn't last more than a round. What do you think?
It's an interesting idea. Let me put it that way.
So Stelios, Dale's going to be gone next week or the next couple of weeks, and so next week, you know what I'm going to introduce? I'm going to introduce the bias chart again next week.
Okay, good.
Yeah, I'm going to introduce the bias chart. I'm going to start. For those of you that are longtime listeners, get your pen and paper ready. We're going to start the bias chart. How many of you guys listening in remember the bias chart?
Joey.
Joey does.
When?
Karad, Thomas, Pedro. All right.
All the wide trade guys.
Yeah.
Yeah.
From the.
I've never heard your rant.
I ran.
I've been with you for 18 months, so you know.
It's because I let you rant. I let you rant and you just shut up. So, you know, like if you put me on a rant, you know, when I go off on a tangent, you know, that's when I have a few seconds to myself where I can start, you know, just kind of letting things go, letting the emotions roll, and you know, I think our traders might get some of those rants coming next week since
cool.
It's summer. I've got a little bit of time, you know, doing analysis, and I'll be able to do that for you guys. So, so anyway, it'll be good next week. We'll miss you.
What a great thing! What a great thing, though, Blake. I mean, you know, I remember when I would run my own thing, or you know, I was doing LAR at FX Street. I never really felt comfortable leaving, but it's so great to know that, you know, when I leave that, you know, these guys won't miss a beat. So, you know, just like with Steve gone, how Greg came in and Andre came in and Stel stepped up and you hung around longer. It's really your team concept. You really coalesced a great one.
Well, great. I
Really?
I believe we got a great team, and matter of fact, Greg is going to be in here today, and it'll be nice. You know, he's covering covering with Steve out, so it's great to have, you know, to be surrounded by such great individuals and minds. You know, last night I tweeted a photo. If you guys haven't seen the photo that I just tweeted, one of the guys from my office, his name is Joe. He was out. His kids are like 16 and 19. His boys. His wife had passed. His wife, you know, passed away a few years ago, and he's a single dad. She suffered from, you know, a medical illness. Anyway, and he's just like one of the coolest guys around. He is from our office in Connecticut, and him and another family, which he's got parents of the other guy's kids. They were out seeing the Grand Canyon, taking the kids out in the Southwest, and they stopped by, stay in Scottsdale a couple nights before they were heading out. And since I can't see him tonight because I got plans, I went out and saw him last night. We had a couple drinks, and he actually is a ForexAnalytix subscriber. He's a paying subscriber. He sits in the chat room, and he knows exactly who everybody is. He watches. He's a lurker. He doesn't talk. He's very quiet, low key. Yeah. He was one of the traders at Citigroup for, you know, 20 years. One of the head, you know, guys on the trading floor on the city emerging market and currency desk. Very knowledgeable guy and very great trader. And he just, you know, it's interesting in our chat room, the people that we surround ourselves with that are in the chat room, and we have a lot of talented folks in there. Matter of fact, here, I'll take over the screen. I'll show.
Yeah, you know, I tweet about that, and people probably think I'm hyping it, but you know, I tweet that, you know, Face and the private members chat is where pros come to get an edge.
Well, you know,
not just learning, not just people learning, but people that already know, that don't have to be, they don't need input from anybody, but they enjoy it.
Yeah, I mean, Joe's one of those guys. He just like he lurks around. He knows, you know, he knows like, hey, you know, this guy's pretty good. You know, this guy's a pretty good trader and technician. I'm going to cue off of him a little bit, and he likes to see what everybody else is thinking, and he really enjoys the interactions that we have in there, even though he just lurks, you know, he doesn't say anything. which I wish he would, because he's actually really good at what he does. And you know, because what he does is he takes a stab at the market and he takes a big position, and he doesn't trade that often. You know, he might only trade once every week or a couple weeks. But when he's like, I'm getting long, XYZ, like we trade him and I trade a lot of stuff together because we talk on Bloomberg separately. So because we have a chat. It's like, we can chat. If you have a Bloomberg terminal, we can chat between each other, and so I have multiple chats going at all times. So but he's one of the guys that he's like, we'll throw out ideas at each other every once in a while. So it's cool, and this is for those of you that don't know, if you're a ForexAnalytix subscriber, you can see that it's summer. I mean, we got like 78 people in there right now, but in this winter, it'll probably be about 110, 120, and there's a lot of us in there chatting all the time. So it's a great community. So it's not just the guys. What I was trying to point out, it's not just the guys that are here on the broadcast or the ones that are working with ForexAnalytix. It's the team that's really involved, all the traders that are involved inside the community, which are you. Those are the that's where the meat of it is, because I sit in this chat room all day long. Now that doesn't mean I don't take meetings or take phone calls here and there, and we all kind of come and go, but I'm pretty much here until the equity markets close, and then sometimes I'll be in here in the evenings.
Eric calls it home away from home.
Home away from home, and
yeah.
You guys might have seen it. I'm gonna get rid of the chat box. So see you guys. Thanks for popping in. All I went to New York a couple weeks ago, and it was great because I had a couple of drinks, a few drinks with some of the guys and gals that were in the chat room. And some of the guys that I've never even met.
Not like an alcoholic, Blake.
Well, I know. That's what we do. It's funny. I don't even drink at home, and but I go out and have a few beers. That's what we do. It's a social thing,
I know.
Anyway, but it's cool because I got an opportunity to meet a lot of the guys from the chat room there. So and there was a bunch of us that hung out. Anyway, hey, we got some Canadian data coming out here momentarily. So let's just kind of review some of the charts just ahead of the data. So first and foremost, let's talk about the euro. You can see the euro really tagged this resistance here. And this is the 38, whoops, I didn't quite draw that correctly. That's a 38% retracement. It comes in 114.25. That's capping prices. You can see we spiked up there overnight. So, that is going to be a pretty key level of resistance on any rally. Now, in the event that we get above the 114.25, I think that allows the push towards the mid 114s, maybe even 115. I know Dale said 115.40, which would be, the target, I guess, what he was looking at as a possible inverted head and shoulder pattern target, something like that. But and that's what he's talking about is this. This is a inverted head and shoulder pattern if it develops. Now, I am bullish the euro. I've been long since 113.60 2 days ago. So not yesterday, the day before yesterday. So I'm sitting in a position, and it's not huge. And I didn't have a take profit at I had a take profit actually at 114.25, and I adjusted it. Actually, I adjusted it for higher prices, and it wouldn't have got hit anyway because last night we spiked up to 114 and like 20 in reverse. So, but I think this is going to be really key going into today. I have to admit the euro dollar is holding up fairly well. We haven't seen as much of a backfilling of the dollar as I thought we would by now, but that doesn't mean that patience won't pay either. So I think we just have to be a little bit more patient with what's happening here in the euro for right now. I would like to see it get back above 114. I think that's going to be pretty key. Cable also spiked up to 127.50 overnight and then backed right off again alongside the euro. So we know that the cable really needs to break above this 127, 127 and 50, 127.60 before we can see it release a little bit to the upside. We have broken out of this little channel, but I don't know if it's really, I don't know if we can really call it like broken. I think it's just kind of, you know, it's waiting, it's trying to queue up from the euro. But again, dollar weakness, I don't know what's going to cause dollar weakness. I mean, we've seen the dollar yen weaken, but that's more risk appetite. So you're seeing, you know, the euro yen, pound yen, Aussie yen, those are coming under a little bit of pressure. The Aussie, very similar, you know, setup. And, you know, when these setups are so obvious, like this is, you know, I'll point it out here again. Let me change this pen color blue. That's good. Well, so I mean, when you see stuff like this and it looks so obvious, it's like, okay, well, maybe it's too obvious, and because it looks very obvious, whether you're looking at the euro, you know, maybe even the cable might be developing something, the Aussie. So I don't want to get too excited yet. Kiwi's wedging, actually. This is more of a, I should change this right now. This is more of a something that looks like a little wedge here. So, you know, that's trying to build up some potential upside pressure. But again, you know, when it all looks very obvious, I'd rather see it break, and it doesn't mean it's going to. The dollar Canadian. Okay, so we have Canadian CPI coming out here momentarily. Here in the next 8 minutes. I don't have any Canadian exposure for what it's worth, and I'm really trying to wait for any type of NAFTA headlines. And the problem with that is that we thought we're getting close on some of these NAFTA, you know, arguments. And, you know, Trump announced yesterday that he's not in any particular rush to get it done. So it's like, as soon as you think that, oh, wait, we're getting close, and you can see the peso was driving lower, you know, driving lower yesterday, then it popped right back up because, you know, Trump let out those comments. It's like, okay, just when you think that the, you know, maybe the peso is going to strengthen a little bit following the NAFTA agreement, you know, maybe we're not as close as the market's thinking. So, you know, here's the peso.
You called the bottom last week. That bottoming formation, you were probing the long side down there.
I did buy right here
out of the way. Oh, okay.
Yeah, this is was it last week or a week before? I forget, but yeah, I bought it at 1860 and I sold it at, I want to say it was like 1892, something like here. Like, yeah, it was a really fast move. I mean, I made this, and then Andre made all the way up to like 19 and a quarter or something. Andre really pegged that one. We both were buying it for different reasons, but both long at the same time, and he squeezed more out of that.
He
turnip than I did. Yeah,
he can sit, man. It's not easy to sit.
No, and one of the other factors that I have always working against me is I'm trading much larger size than I'm used to historically in the past, because trading for a firm versus trading for yourself is a little bit different. So when I'm trading for a firm, I've got these huge positions on, so the numbers look, you know, staggering when you make money or you lose money, which I'm not immune to losing money, believe me. So when you get in you make a big gain like that, it's like, okay, you know, that happened really fast. I'm going to take some profits off the table. So anyway, there's the peso. It's just kind of waiting. We have this. Let's take a look at the dollar yen. So the dollar yen broke lower, but let's not forget that the dollar yen, the 200-day moving average comes in right around 110. All right, so before you get all, you know, your panties in a bunch here, thinking that the dollar yen's breaking down, just remember we are very sloppy. Look at this. This is this week. Just to make sure you guys all understand. This is this week. It is a freaking disaster out there, and if you're out there chasing the market one direction or the other, you're going to get slapped. I mean, look, the stock market was just selling off a few moments ago. We like, oh, look, the stock market's come under pressure. It's like, you know, this, and I said it 20 minutes ago, I'm like, this is probably the time you want to buy it, you know, and because I don't know if the market's ready to go down yet. I think that the market's going to roll over this fall, but I you know, being it's summer, it's slow. You know, I still think that there's a good shot that we hit new highs first, and then roll over. And I'm hoping, God, you know, help us all. I hope we get some sort of capitulation to the upside, like where the market just does one of these deals. You know, Dale, this would be awesome.
Yeah.
Like a
just blow to new highs.
Yeah, like a big spike up to like 30-50 in the S&P. We just, you know, do like a big, you know, you say like a big 10% move up, you know, and then reverse that same day. That'd be just awesome. It'd be epically awesome. I'm hoping something like that happens, just to give us volatility. I mean, you know, you and I as traders, you know, we prey on volatility. So that type of move here would create a top in the market, and then we have a tradable market, because once we can get out of this grinding cessation of the market, which we've been in for so long, you know, what I'd hope for is you get some spike up, you know, blow out the top, reversal, and then we go range bound, and then, you know, you go range bound, and you know, this type of range bound type of activity that I'm, you know, illustrating here, you know, over time, that's the type of stuff that, you know, you and I can profit from. It's the grinding straight up in the market or grinding straight down in the market. It's just as frustrating, guys. Don't get me wrong. It's just as frustrating when you are grinding lower in these markets. You know, when you're grinding lower in these markets, it's just as frustrating to try to make money when this is happening too. The best markets for us to make money in are when you see this right here. This is like perfect for us as traders. And so I don't want you to think that, oh, you know, Blake's a super bear, and, you know, I'm just, you know, I'm looking for the market to crap the bed, and, you know, we're gonna drop 50%. I'm not thinking that, and I don't even want that. I just want this. I want volatility, and this is like this is where you know, we can grind out making money in the markets, is when we see this type of stuff. It's not fun for investors, like, you know, longer term investors, but it's, you know, it's the stuff that you and I as traders, that's how we do it, and that's what I want to see. This type of stuff is just very
the opposite could happen too, Blake, where they just flush out the January, February lows. And there's a panic, people get out of their longs, and that's a great buying opportunity at 2,400
yeah,
for the move to 3,200.
Sure, you know, anything like that. You know, and just volatility, for crying out loud. You know, when the VIX is sitting here, at 10, 12. This sucks. This is tough. All right, we got Canadian data coming out here. Right. One moment, let me see. We got Canadian CPI. I don't have any Canadian exposure. Crap.
People want you to sing next week the Greek God song.
Hold on. Oh no, I can't do the Greek God song. I can't do it.
Sound like a rabbi.
It's horrible. It's like people hit mute when I do that. All right, so here's the dollar CAD. A resistance, I think, is at 131.70, 131.75. Even if we punch into new highs, you got to be really careful with that, just because we are in a channel. Stand by for CPI here. How long we got? Here we go. Wow,
indeed.
Wow, that's some strong inflation data right there. CPI 0.5%, 3 year over year. Oh, mama. Wow. Okay, so now any pop back, let's look for revisions coming up. Core.
No, it's all in line. It's all in line.
Yeah. Yeah, it's this. Okay, so.
And this is something that is consistent now among most major economies. Inflation is at target or above. You know, we had the European inflation 2.1% year on year. UK is 2.5%, but that's been higher for a while. You know, the US core PCE was at 2%, it's at 1.9 now, but it's there. Canada 3%. I mean, that's huge.
It's pretty big. So let's see if we can get any kind of pop over to see once a NAFTA deal gets done. It's not even going to do it. I was hoping for maybe a push back above 131. I was going to pound it, but look, you know, you put together a NAFTA deal, and then you got the Bank of Canada that's going to be ready, right? They're going to be ready. They're going to be like, okay, well, it's time for us to step in.
And remember, they've already hiked twice in the last year, or however many months it was. So it's not like they've been stationary for, you know, years and years. You know, they're ready. They're going to be ready.
Right. I sold some at 90 there for 89 actually, a little bit, but I just closed it at 83 or 84. I just made a little bit, not much, but just kind of scalping it. I just shorted it at 89, covered it. I'd like to get a price above like 131. Shoot, sorry, that slipped out. I really would like to get a move above 131 to sell some, but I don't know if that's going to happen. You know, I have to give kudos to Jeff, or you know, the Adam in our chat room. He was shorting the dollar Canadian. I'm not sure if he stayed in it last night when it was up at 131.60 when we closed there last night. I hope he stayed in that one. But I mean, look, this is the dollar CAD here. This is a channel, you know, but yeah, again, you piece together a NAFTA deal, and Bank of Canada is going to have to step on the gas a little bit, and they're going to have to start raising rates a little bit more aggressive. The only reason why they're waiting right now is because of, you know, because of the uncertainty, right? So, you know, you remove that uncertainty, Stelios, and next thing you know, you got a central bank that wants to play catch up with the Fed to a certain extent, you know.
Yeah, it reminds us a lot of the UK situation, right? There's, you know, they should be hiking, but they're not because of all this uncertainty that is associated.
Yeah, you know, so one of the guys I was out having a drink with, I was out with the guy Joe, who's a ForexAnalytix subscriber who trades in the Gelos office like myself. His buddy. That is also in that picture. He's a mayor of a township in New Jersey, but he also works for the New Jersey pension fund. He trades equities there. That's his day job, right? And we were talking about Brexit last night, and he doesn't think Brexit's actually going to go through. You know, wow. You know, I know, that's but I know that he goes, I don't think it's eventually going to go through. I'm like, can that happen like tomorrow, like tonight? Because I'm on the cable, you know. So does
he think there's going to be a second referendum, or that there's going to be something comprehensive?
No, he thinks it's going to be a second referendum, and then he goes, you know, I didn't agree with him. Just so you all know, I think it's going to eventually, you know, it's going to happen. But I thought that was kind of interesting. I'm like, yes, happen tonight. Tonight would be great. Let's get another.
It's funny because in other countries, when you are voting on such a hugely important aspect of the country's future, there has to be a minimum gap between, you know, a minimum hurdle to actually make it pass. So there's like it has to be 60-40 or more, and you have it, you know, 52-48, which was really, really close. Now, having said that, this was not the case in the UK, so they voted to leave, and really they should be leaving. But you know, like you say, anything can happen. I think there won't be a second referendum, but they're going to try and make it such a comprehensive agreement that effectively there will be, you know, not no change at all, but there's going to be a lot of common parts.
Yeah, well, you know, maybe that will be the case, and you know, the more it complicates, the problem is the more complicated it becomes, and the more, you know, we have that uncertainty, which could continue to be a drag on the cable. I mean, and we talked about this yesterday, Stelios. I mean, it's the biggest problem with the cable right now is the uncertainty factor. And you know, as much as I'd love to see it pop here, I still do think we are gonna rally back towards 130 eventually, but I'm, not going to hesitate to take it off the table either. I'm barely positive in this dang thing, and I've been sitting in it for a couple of days now on the long side, and it is getting frustrating. And people here have heard me say it before. What does not go up usually only has one other direction to go. So I get a little nervous when we just sit here and consolidate, trying to build this base, and we're not, making any type of headway. But
Brexit is like a CIC order that people put on stops. Cancel if close. You put your stop in and it gets close to your stop, you cancel. Come on, everyone raise their hand if they've done that before.
Yeah. That's so funny. I've done that, yeah, for sure.
Cancel it close, yeah.
I put in stop orders overnight in the market. Obviously I've got to keep stops and to protect, especially when you're trading. You should be doing it at all times anyway. But when you have especially I have to be very diligent about that when trading large sums of money. But when when a stop does get close, it gets close to my stop, I will pause the order and manually trade it, because usually my stop is there for a reason, so I know it's near some big technical level, and I know that I could be getting targeted. So not just me, but anybody, it's not, because I never classify myself as special, or I just think like every other trader out there. So if I put my stop, like let's say I'm short the pound here, and I put my stop at 127.65, because I know that if it breaks above here, it's gonna rally, right? Like I'm just using that as an example. Let's say I'm short and I have my stop here. If we start getting close to that, I might cancel my stop, because I know that they might be probing everybody that's got stops up there. So I'll manually exit it. But I also am very diligent about saying, okay, I need to pull the plug on this too. I can't lose any more. So that is very important if you do that, because at that point I become naked. I don't have a stop in, so I have to manually
fail safe.
Yeah,
the stops are fail safe when you're sleeping.
They are, but when I'm in front of the monitor and I'm in front of my trade, I can, instead of
discretion, then
I have some discretion, but you have to also know yourself too. If you're one of those people that oh well, now it's at 127.80. Oh, it's definitely going to turn here. Oh no, now it's at 128.25. Oh, it's definitely going to turn now. It just went up 50 pips. How is it going to? How is it not going to revert? If you're one of those people and you're one of those people, then just leave your stop in. Get stopped out and walk away from it. So.
Advice.
Yeah, you have to have that discipline in order to execute like that. So, I see that. I was going to say I hear Greg is here. Hi, yes, Greg. How are you?
I'm fine, thanks. And you?
I'm happy it's Friday. I'm excited, and I know it's well. I went out, and I don't normally have drinks in the evening, and I did last night, so I woke up especially tired today, which I don't.
You were similar like me. We were with friends. We were watching some games for Champions League qualification. So it was also late at night.
So when you woke up this morning, you woke up a little hazy, a little fuzzy.
Yes, but thanks God, markets didn't move much. So
you're young. He's young.
You are young in our book. So
yeah.
Well, hey Greg, so we haven't seen much reaction in the dollar. The euro is just kind of sitting here. I must say I noticed that you closed your patterns in play with your dollar longs. Very nice. But what are you thinking here? I mean, if you close those patterns in play, it must mean that you think that there's maybe some dollar weakness coming potentially. What do you see, and how are you feeling?
Actually, I still think that dollar index can maybe see another final leg to the upside, and I will be tracking current rallies to the upside on euro dollar and to the downside pullback on dollar index as a corrective movement. So maybe we see a final push within this dollar bullish cycle next week. I'm watching support on dollar index at 96. This was actually August, this week low actually. So as long as we are above this level, I still think that this can be still a bullish trend actually. So
yeah, I swear we didn't talk before I said that at the beginning of the show. But you know what? But you know, when Grega, you know, I have an idea, and then Grega comes on and says the same thing. You know, so Grega, you think could we get to like 97 and a half or so?
Yes, or yes, 97, 97.50 around there. Yes.
Okay. All right.
Well,
so now you guys know what to do next week.
There you go. So you make so you make a little you get a little dip to 96, maybe as low as 95.50, which would have been the breakout point here, and then for another move higher.
Yes, but from a trading perspective, you know, I'm not really sure if I would put new dollar longs here, because I can see leg up from start of August, actually like a final of a bigger 5-way rise. So I think that it just.
Oh wait! You got to show us that then, because I'm trying to visualize it. So here I'm gonna allow you to show us what you see, because again I can't visualize that.
Okay. Okay, so you see charts.
Yep, I can see them now.
Yeah. So actually, this move to the upside can be counted in 5 ways. We have seen move out of this triangle consolidation. So sooner or later, I guess we will see a pullback back into this zone. Okay.
Right.
So I think that either we will see a pullback of a wave 2 and then big jump into wave 3, or maybe it will be still just another wave 4. But the idea is that sooner or later we will see pullback. So as I said, why I think that there can be another leg to the upside for wave 5 is because out of this triangle, still I don't see clear 5 waves. Okay, we have waves 1, 2, extended 5 sub waves within wave 3, and now we have a wave 4. And normally wave 4 will retrace, if I zoom this in, will retrace back to the area of a former wave 4. Okay? So if I label this with 1, 2, 3, 4, 5, and this was a former wave 4. So as long as it holds, I think that there is a chance that we will see a bounce. But as I said, because we are still very late in this lag here, I would be very, very careful. I still sometimes look for this kind of setups, even if I think that we are in the final stages of this trend, but definitely I would be doing it with much lower position size than I took short on euro dollar at the start of this week, or it was last week, I don't know anymore actually.
Oh, so interesting.
This should be taken into consideration that sooner or later we will see a pullback. So just everyone, I think, has to be aware of the short-term levels. As I said, 96 is the key level here for this support for a wave 4. Because if we go just sharply through this level, then obviously this would not be, probably not be wave 4 anymore, but maybe even a trend change here.
Wow, that would be pretty important. So that support at 96 is going to be pretty key then on the way down. Yes,
but on the longer term scale, we really have to respect how strongly the dollar turned to the upside in this year. So I really think that any pullbacks, deeper pullbacks, will be just temporary, and that new bounce will again occur. But we all know that nothing moves in straight lines, so corrections will occur once more. So this is what I will be primarily waiting for.
Okay, that makes a lot of sense. Hey, can you do me a favor, Greg? Can you take a look at gold? I do have a long in gold personally, and then we do have a pattern in play as well. But gold, you know, gold and silver both got just walloped this week, and we got just crushed. Those precious metals, they're not so precious as they once were.
I was thinking and looking at this gold myself as well. It made, I mean, very clear pattern. Okay, very strong drop, sharp rally here, and what I like about the current price action that we are going slowly here, and this typically represents a corrective movement within next leg to the upside, because this was an impulse, very strong move, very strong rise from the lows. Now this is a very slow move, so I think that we will see another push to the upside, but I'm not sure if this will be whole corrective recovery against the previous 5-week decline, or maybe new trending change. But I think that we may see prices reaching this zone on 1190 up to 1200 maybe.
See, and that's another thing to factor in when you're trading the dollar, because that is going to complement, you know, a dollar pullback, the dollar index back towards 96.
Yes, definitely.
Right.
And even euro dollar, if we take a look on euro dollar, even here, I think that this, if we are in a wave 4 here, okay, there's still 1430 resistance that hasn't been tested yet. I'm sure that there are some stop orders up there, so maybe market has to clear those before it may again turn to the downside. But the idea is that this rise, even if it's in 3 waves, is not accomplished yet. Okay, this was first leg, wave A. Now we can be forming wave B, and then final push up maybe will follow into wave C or 4. So even this one suggests that we will see more upside here maybe on euro dollar, but again, it can be only temporary rise. So it will depend how market. Maybe Monday, Tuesday, they will be quite. This will be quite important days for the next cycle, because we will have more price data and we will know that this was wave 4. We see final push into wave 5, or maybe that bottom has been formed. But that's because
interesting, you know, and that's the kind of what I've been.
Yes.
Yeah. Hey, yeah. Are you there? I'm sorry, my audio is cutting out. So, and I think I'm having a little bit of a connection issue.
Sure, no problem. What were you saying?
Oh, I think I'm having a little bit of a connection issue. Hold on really fast. Okay. I'm sorry, just continue on. Yeah.
Sure, I will take a look also on Aussie dollar, because I have been covering Aussie dollar as well recently. So as you know, we have been breaking out of this consolidation. It was a triangle placed in a wave 4. We have seen a nice move to the downside into these first targets of triangle measurement, and then there was a second target a little bit lower, but it appears that we may not see this level tested. So I will not be surprised if we are actually turning into a new corrective recovery here on Aussie dollar. I would be aware of this potential push above 73.13 mark, because if we break back above these previous lows, then I think that we have a bottom in place, and that much higher corrective recovery will occur in 3 waves. So if anyone is considering to be short Aussie, again, gold is pointing to the upside, at least for another push to the higher. So Aussie dollar could be supported in this direction as well. So
yeah, and I think the market's pretty short the Aussie right now too. I think that's you know, a big risk of the Aussie dollar. I think the move below the 73.20.
Yes, support. and also regarding gold, we have to highlight, as I noticed, sentiment index on gold was around 6, if I'm not wrong.
Yes, it was extremely weak. I think it was 6 again, like for 2 days in a row.
Yeah, so we all know that this is such an extreme level that definitely.
Yeah, the COT was also extreme, Grega. And so you still think, you know, I don't think a $20 rally was enough to shake out enough shorts either, considering how short the market is.
Yeah, so it's room for, I think that we may see even 1200, but not maybe today, just it won't go straight up. So, but next week could be very interesting.
Right. Well, you know, silver dropped pretty aggressively from 15, and I think that, and I thought yesterday we might actually come back and take out 15 and do, you know, give us a complete round trip, but that didn't happen. But I think silver is another one of those assets that, you know, we've just got to keep an eye on because it had such an aggressive move this week. If we start retracing some of that, you know, that's going to help turn gold. But oh, look at that big triangle bottom that you got on silver.
Yes, but I still think I would be careful here at this triangle. Okay, A, B, C. I think that this can be wave D, wave E. Okay, so now weekly close. This is a weekly chart. The weekly close could be very important here.
It's right. It's underneath it, isn't it? Right now,
yes,
or
but it's not the end of the week yet.
yeah,
yeah, right.
Yeah.
You know, we could easily go to 15, maybe even today. So it will be interesting to see how we close here. But even if we close around 1470, that would not be a decisive break lower. In a decisive breakout, what I want to see is
Take out the B low
or around 14. That
Okay.
would be a breakout. You know, anything else is just some kind of a stop hunting.
Yeah, yeah. I see that I wasn't even looking at the breakdown that we have right now. So we'd have to get all the way back above, like, I would say 1485 or so, right?
1480.
line.
Above the trend line, yes, exactly.
Yeah, okay.
And that will probably keep a lot of those shorts on the wrong side.
Yeah, for sure. And hey, Dale, do you have do you have a guest coming on today?
Not today.
Okay, so it's just this team here. Okay,
Right.
very good. All right. So, Gregor, what else do you have on your radar that you're looking at?
I'm looking at. I can update crude oil real quick here.
Wow, crude is screaming too, and you know, crude broke that trend line there, and man, we are really rallying.
Yes, and we with Steve, who showed up on Tuesday, I think, we discussed about crude oil, how important will be when we see our new lows. We highlighted back then that we saw a completed correction here, A, B, C, and that we will see lower prices. And we have seen a very nice move to the downside. Okay, but what I see happening now is actually quite aggressive run higher. So I would not be surprised if we will see a new free wave recovery. Of course, I will have to adjust this wave count, so just ignore the labeling. But the idea is that we may see a free wave rise back towards 67, 68 maybe, because I see that this lower trend line, if I just remove this, old labels, this lower trend line held as a support, which in fact represent a potential wedge. Okay, so
Which could
I think
really take it higher if it broke it to the upside.
yes, so I would be really careful with any new shorts here, and also on Fridays, crude oil moves very often to the upside, and with current dollar being in a pullback, I think that this makes sense. And also, let's not forget on Canadian dollar, which is moving very sharply lower. I believe it was some data coming out, right?
Yeah,
So,
yes, it was CPI was strong.
Yes, and we are seeing prices actually breaking below this channel. So we remain trapped in this downtrend channel that is in place since end of June, actually. So Canadian dollar is doing quite good, actually, against the US dollar, or against any currency, actually, if we consider how dollar was strong recently, even against the Aussie, against New Zealand dollar. But Canadian dollar is really doing good in this environment.
Great point.
Yeah, so with CAD moving to the downside, dollar CAD moving to the downside, I think that crude oil could easily see that free leg recovery towards 68.
And that would be something, actually, if we move to 68, because I don't think a lot of people are expecting that. Interesting. Wait, one last thing, and then I'll and you know, I can take over for the last few minutes if you want. As far as stocks go, you know, we were talking about equities, and you got the S&P right there. I'm not sold on the idea that the equity markets are ready to roll over just yet. How do you feel about equities at this point?
I was patiently waiting for this reversal to happen quite some time now, but we see prices moving higher, but still struggling. I don't see any significant bullish momentum or break to the upside, and I still think that this can be some kind of a wedge. So maybe we just have to see a break to a new all-time highs, and then maybe we see a reversal with a delay. But as you said yourself, for now, market is not turning to the downside yet. I have been looking for this pattern. At the start of this week, I said that we have seen a 5 waves down and a 3 wave recovery. So I was looking for minimum projection towards 2800 or even towards 2790. We have seen that happening, but notice that the whole leg to the downside, whole pullback, was actually now being made by 3 waves. And we know that this is a corrective movement. And this recovery, in fact, is in 5 waves. So for the short term, I think that actually stocks could see a new push higher here, at least on the short term charts.
Right, and you know, I kind of feel the same way, Greg. I know that we're in summer, and you know, one of the things that kills me is that usually we get a summer pullback, and how many people have just been trading on the short side of the equity markets, waiting for this, you know, inevitable, never happening pullback. You know, I'm thinking that, you know, going into the beginning of September, they're going to get squeezed. You know, I think that and it might be that last hurrah, you know, that one last push higher that you were just talking about. Dale and I were talking about that earlier, thinking that is a pretty strong possibility at this point.
Hey, Greg, doesn't NASDAQ have a different picture? I mean, to me, they look different. I'm wondering if your wave count shows it any differently. The NASDAQ 100.
Let me take a look. I can make a quick look here.
Because can you remember the last time NASDAQ was unchanged with the Dow up 400? That happened yesterday. And the S&Ps were up 20, NASDAQ unchanged.
Really?
Yeah.
But technically, look, it's even here we have higher highs, higher swing lows, but nothing so significant. So maybe it's the summer fault, you know, but still this looks like a wedge.
Yeah, it does.
I mean, I would definitely not be expecting wave 3 higher from here. If there is coming some very strong volatile moves, this will likely more happen be to the downside rather than to the upside with this pattern. So
okay,
what
that could be maybe
yes.
one more high, maybe one more high here too.
Yes. Exactly.
Okay, interesting. Well, Greg, I want to say thank you for being here this week. You've been awesome, you know, helping out with Steve out. Really appreciate you. Any other closing thoughts before I take back over?
No, not really.
All right. Well,
thank you.
No, thank you, Greg. It's awesome, awesome to have you. You know, awesome to have you here. And we were talking about it before you got here. Just we have such a great team at ForexAnalytix, and we really appreciate you being here this week. And we'll see you next week.
Sure. Thank you.
All right.
Have a great weekend, Wizard. See you in a couple.
You too. Thank you.
All right.
Thank you, man.
Thanks, Greg. Now, I'm just going to wrap up a few last things. First and foremost, before I wrap up my thoughts on these on the markets, I want to say if you guys haven't visited Forex Park FX, make sure you do so. They're our partner they are our sponsor for these webinars that you guys get for free. So if you want to take advantage of getting ForexAnalytix for free, if you don't live in the United States, you live outside the United States, you can use the reimbursement program. If you want to learn more about that, make sure you click on the Skype or email links down at the bottom here where you can contact them directly. I noticed, and you may not have noticed this, Dale, they actually hired a couple more individuals. They hired somebody from FXCM just this week, so Forest Park FX. So it's yeah, they're
growing.
They're growing, building on their teams. They offer an awesome service because they really tailor your goals to what you're looking for with a broker, and if they can help, they're going to help. And if you're a U.S. citizen and you can't participate in the reimbursement program, still contact them, because they will help you find the broker or the solution that you need to achieve your goals, because we're all different. Every one of us, the way we trade, the way that we whether we're active or we take bigger positions in the market, we have a bigger account, we have a smaller account, those are all things that need to be addressed when you're finding a broker that, not just doing some plain vanilla brokerage firm. So make sure you reach out to Forest Park FX. They're really awesome guys over there. Today's a perfect day to do it since it's Friday and things are probably going to slow down. Everybody's going to Hamptons here in the next couple hours. So and I want to wrap up with the euro dollar. So we are up against this neckline. I actually just took a quarter of my position off the table because I can add it back on should we start breaking out above 114.25. But I did take it off because we're just nudging right up against there. The pound also is still below the 127.50. I think it'll break loose if we break above 127.50. The dollar Canadian is weak. We are heading back into this channel, probably down towards the 130 level. Not necessarily right today, but we could, especially if the dollar continues to lose some strength against the rest of the market. The dollar Canadian could continue to slide. I wouldn't be trying to pick it up here necessarily because we had very strong Canadian data. Actually, Forex Live just said that rate hike odds have increased since the CPI data came out. And like I said, you piece together a NAFTA deal, you're going to have a Bank of Canada that's starting to aggressively raise rates, in my opinion. So being long the dollar Canadian is a little scary in my view. And Stelios, do you have any last comments before we go? If you're still listening in, not sure if you're listening in.
I am still here. Well, I was, the two things I wanted to say was, one, equity markets, they are so resilient. And, I will listen to what you and Greg has said, and I do think that the next move is probably higher. And, we've seen every meaningful dip just being bought for ages and ages now. This eventually is going to stop simply because something cannot go up forever. But it just feels that there is so much appetite still for global equities, and okay, the Nasdaq is a little bit of a different story, but there's still so much appetite, and volatility gets sold straight away every time it spikes up. So for the near term, I just don't see what's going to bring stocks down, and that takes me to the second point, which is yields. And I personally think that rising yields is going to be the trigger for a good downward move in stocks. But those, again, they seem very resilient as well. Every time the 10-year Treasury hits 3%, it just goes straight back down, to 280, 285 like it is now. And even though we saw this today with Canada, we're seeing higher inflation all across the world. Yields will have to eventually start moving higher to, I'm not going to say they're going to come back to pre-crisis levels, but they should represent, the risk involved with owning a 10-year instrument and inflation as well. So the yields also seem to be finding good resistance as they hit certain levels. Bund's the same, Treasury is the same. I still think that the yields are probably going to go a little bit lower in the near term, but eventually they're going to break out, and I think that will be the trigger for equities.
Yeah. So you think when yields break, like the 10-year breaks like 3.1% or something like that?
Yeah, it has to break, convincingly. So if it gets to 3.1, 3.2 or higher, I think that will be it.
And
because,
what?
we in 10-year US, yeah.
Yeah, and then this would be like the bond market. What Stelios is talking about is the bond market rolling back over, and as yields, that would mean the yields are ripping back up above 310 or whatever. So
yeah, and remember, we've said this many times. I don't mind repeating it once more. We've had a good part of the push higher in equities has been due to buybacks, and buybacks have happened because corporates have issued bonds at very low yields, taken the cash, and bought their own stock. As yields go up, this thing will slow. It has to slow down because borrowing will become more expensive, and that's why I think equities will suffer.
I've heard some economists talk about the one thing they're worried about is a corporate debt bubble, just because of that. Can you imagine when rates go up, they have to roll over, they bought stocks, and what they bought is worth less, and it's harder for them to repay or roll their debt? That would exacerbate it pretty good, wouldn't it? They're buying stock. They're buying stock with borrowed money.
Yeah.
And if there's a problem in the corporate bond market and we get a correction in stocks, that would be a double whammy for these corporations.
Absolutely. Spot on,
yeah. Okay.
Well, all right. Well, guys, I want to say thank you so much for being here all week, and it's been a great week despite it being summer. I think we've all had a pretty good, some exciting moves. I still think that everybody should be watching the lira, even though we hadn't reviewed it yet today. I think if it slumps back below 6, I think that's going to help risk appetite. And there's still a lot of we should put them up for a wrestling match, right?
Yeah,
Dale?
put them in the ring. The lira might be, lira might be, this might be a pullback to buy in U.S. dollar, Turkish lira. Do you know what I mean?
Well, look at the weekly candle, and I think a move back below 6 would be, pretty bearish for the U.S. dollar Turkish lira. We could, but we'll see. I think a risk appetite probably hinges a lot on what happens with Turkey. So Stelios, thanks for being here all week. Coach, have a great couple weeks off. Remember, if you guys didn't hear, Coach is going to be out for a couple weeks, and we're going to be taking over. We're going to reinstitute the bias chart, I think, next week. So we're going to have some fun with that.
Okay, thank you so much, Blake and Stel and Steve, for giving me some time. And I haven't had a vacation in 4 years, and the last one was in the hospital. So looking forward to this one.
Oh, enjoy it. Yes, there we go. All right.
All right. So everyone, thank you so much. Face Warriors, sign up. The offer's good till the end of the day. I'll mail you $1. But if you haven't tried this platform, you have to do it. And the weekend's the best time because you could go over all this research and then have your game plan for next week. And with that being said, remember, most of all, my friends, don't just count your pips, count your blessings. Be grateful that Forest Park FX is sponsoring this. So call them because they make it easier for us to provide this for free for you guys. So adios and good hunting. And I'll see you after Labor Day. Okay, thanks, everyone. Much. All right. Thank you, Blake. Thank you, Stel. See you guys. Adios, Warriors. Thank you, Dennis.